Hello, everybody, and welcome to today's Trade Smart Tuesday, where we will be talking about market breadth. Market breadth made easy. What brought us to today's topic? Well, I searched around the internet and I tried to find, what are people talking about today? And I found a lot of stuff talking about market breadth, and it seems like it's far more confusing than it needs to be. And not only that, but it's not as helpful as what it can be. So I wanted to make something for you guys that would help make market breadth not just easier, but also make it a lot more meaningful. So, before we dive into the content, first I want to welcome everybody. If you haven't already liked and subscribed, wherever you are, now we've got these cool little banners that can go across the bottom. Make sure that you like and subscribe to the channel. Make sure that you also leave a comment. Let us know that you are alive out there. I want to get more engagement, have lots of Q&A going on in here. So drop a comment in there. Let us know that you are here, that you're alive. Tell us where you're from, all that good stuff. And now let's dive into the bulk of the content. So market breadth made easy. A lot of people will just look at the total number of stocks, the total number of stocks advancing, the total number of stocks declining. And I ask you this, is that helpful? Go ahead. Let me know. Let me know that you're alive. Type into the chat. Personally, I find that to be borderline useless. And the reason why is because I'm looking to trade growth stocks. I'm looking to trade leading stocks. If that's you, let me know. Type into the chat. If we're trading leading stocks, if we're taking a look at every single stock in the market, right? So all 10,000 or so stocks, and we're trying to look at the total number of advancing, the total number of declining, is that really telling us what we need to know? No, it's not. So here are a few things that will be helpful for you. And I actually wrote them all on this board here. So we're going to have some fun today. So we have four main things that will help you to understand market breadth and to make it easier, and to not only make it easier, but to make it more meaningful for you. So number one, nothing but the highest quality here on the show. New highs versus new lows. Let's take a look at the number of stocks making new highs versus new lows. Let me share my screen with you, and we'll take a look over here at the NASDAQ. So here's the NASDAQ. The NASDAQ has been making new highs. It actually pushed into new highs today. Has this been a strong rally? Has there been good market breadth? Based on the number of stocks making new highs versus new lows, the answer is no. Right? And so why, maybe you're asking yourself at this point too, why is market breadth even why is market breadth important? Market breadth is important because it lets us know if the rally is strong or if the rally is kind of weak or selective, or not one where we want to be plowing into, right? Like, almost like if you were driving a race car and you're coming up to a turn, this is something that would tell you if you should be easing up or not. So here is, again, this chart. So back here, right? Back here, we had a lot of stocks making new highs. Over here, right? Zoom back a bit. Back in here, more stocks making new highs than new lows. But what happened over here? We're still pushing into new high ground, right? Both at this point of the chart and at this point of the chart back here. We're pushing into new highs. What's the difference? The difference is that back here, there's a lot of stocks participating. Over here, there's not. How can we tell this? Right? You might look at the advanced decline. No, that's not good. The reason why just straight up advanced decline isn't good is because you don't know how many are pushing into new high ground, how many are making new lows. We are trying to trade the leading stocks in the market. The leading stocks are going to be making new 52-week highs, aren't they? As growth traders, as momentum traders, we want stocks that are going to be pushing into new 52-week highs. So taking a look at the number of stocks making new 52-week highs versus 52-week lows gives us some really solid insight into market breadth, right? And it's as simple as putting this indicator on your chart. If you've got TradingView, you could get the NASDAQ number of new highs versus new lows. It's right there. And also, I've got the same thing over here on the New York Stock Exchange. So this is the NYSE price action. Down here are the number of stocks making new highs versus new lows in the NYSE. And yeah, you can tell back here, strong, robust uptrend, right? All the green are new highs. The red are stocks making new lows. Then you come over here, and what happened to the new highs? They all dried up. So the stronger your new high list is, the stronger the trend is. Looks like we've got at least a comment coming in. All right, VBE from Austin, Texas. Welcome, welcome. Yeah, again, for those of you just joining us, I saw a bunch of you just hop on. First off, welcome. Make sure that you like and subscribe to the channel if you haven't already, and leave a comment. Let us know that you are alive and breathing. And I want to say thank you so much to VBE over from Austin, Texas. All righty. So on to number two. Number two, the second thing that will help make market breadth easier is the number of setups. Right? Let's make this a bit bigger. The number of setups will help make determining market breadth a lot easier. And why is the number of setups going to make determining market breadth so much easier? The reason why is because it's going to tell you if there's a lot of stocks to trade or if there's not. Simple as that. So if let's say that the market right now, the market is moving into new highs, right? Well, we saw that. Let's pull up the charts again. We'll go over here to the NASDAQ, right? The NASDAQ is pushing into new high territory. It might seem like a great time to go buy, but if the store is already ransacked, right? Like let's pretend that it's Black Friday back in the late 90s when people actually went to stores. If it's Black Friday in the middle of the afternoon, guess what you're going to find? You're not going to find a whole lot because it's already been slim pickings. There's still plenty of demand, right? That's driving up the price, but there's not a lot of stuff left on the shelves. So how can we know this? How can we track this? Well, here's what I do. And perhaps you've seen this spreadsheet a few times before. Maybe you haven't. Maybe this is your first time, but I track everything. So this here, this is my playbook for the week. And it basically acts as my journal. There's a bunch of different tabs on the spreadsheet. The one that we're looking at right now gives me an overview of everything. Actually, let me get my face out of the way here and we can look at the spreadsheet a little bit better here. So the thing that I'm talking about right now is this, right? The number of setups and the win rate of those setups. And you can tell that I've been tracking this on this particular sheet for a little while now. So what does this tell me? At a glance, it tells me how many stocks are setting up, versus my universe list, right? So I already ran all my screens. Let me know if you guys run weekly screens too or daily screens, but I'll run a whole bunch of screens. So that way I'm getting just the stocks that I'm interested in. I'm interested in growth stocks. I'm interested in the kind of stocks that can move 50 to 100% in about 6 to 12 months. In the market right now, there's 345 of those. Of that 345, how many of them are setting up in actionable patterns? Well, this week there were only 28. 28 out of 345, not a whole lot. So that's telling me, right? Number of setups, there's not that many. So what does that tell me about breadth? Does that tell me that it's a good time to go shopping or not? Tells me that it's not. Right? Very simple. And something else to add to number of setups, how are those setups performing? So also right here, of the stocks setting up, there was only 57% of them setting up as of yesterday. Now, let's go find out how many of them are still moving up on the week. 23. 23 in total. So if we come over here and we update this, right, you can see how complex it is, right? So 23 divided by 28. Now we're at 82. So of the handful of stocks that are setting up, they're starting to perform a little bit better, right? So that's telling me that, you know what, there might not be that much merchandise on the shelf, but the merchandise that's on the shelf is doing okay. So that's something that gives me an insight into market breadth. And this is all stuff that you could do yourself. All you need is a screening tool and a spreadsheet. So that way it makes it real easy to track this stuff, right? And some basic Excel skills. You can see how easy it is. I'm not a whiz really well with Excel or Google Sheets. Basic formula there. Let me know what questions you guys have. Type into the chat. Are we ready for number 3? What do we got up for number 3? For number 3, need to get a drum roll sound. For number 3, we've got quality of the setups. And apparently I erased half of it, but that says quality of setups. So why is the quality of setups important? Well, we need to know not just how the stocks are performing. We need to know if they are good, solid setups, right? So that's something else that we could track as well. I track that right here. So every day I will go into the market and I will come up with my watch list. And not only will I come up with a watch list, I'll also grade that watch list. And how do we grade the watch list? That's a great question. Thank you so much for asking. The way that we grade the watch list is by seeing how closely does that watch list or the stocks in that watch list, how closely do the setups match our models? So that means that we need to have models, right? So that's why I made this tab here, my model book. So I have a variety of different setups that I will trade. And I defined, well, what makes a pullback? And these are my definitions for a pullback. The time frames that I'll look for them on, the length that it should be, the depth that it should be, the general look and character of it, where in the trend it should be, the market type, all this stuff, right? It looks like a lot of stuff. And you know what? It's not that it's easy, right? It'll take you some time to make this, but you make it once, and then you come back to it, you update it, and you use it as a tool, and it helps you get far more efficient at trading. And this is the kind of stuff that I was using not just now that I'm busy trading full time and coaching people, but when I was part-time, still with the day job, still trading at night and on weekends. This stuff here is what helped me become efficient to where I didn't need to look at anything else. I didn't need to look at the paper anymore. I didn't need to listen to the news or gurus or any of that stuff, just the market, right? Well, for those of you that are O'Neill fans, you'll appreciate this. What was O'Neill's story for how students should go about studying fish? type into the chat. Let me know if you know the answer to that question. What did O'Neill say that how students should study fish? If you know the answer, type it in. I'll give you some kind of a bonus. Well, we'll figure it out. Anybody? I know there's a little bit of a delay, so I want to give you guys a second here. We've got 45 people watching over on X. We've got a few people watching over on YouTube. And let's see, Rumble. Rumble just doesn't seem to be working for me at all. I think I'm going to have to cancel Rumble, unfortunately. But all right, looks like nobody knows the answer. So the way that O'Neill said that you should go about studying fish is to park yourself in front of a fish bowl and watch the fish. As simple as that. And that's going to teach us everything that you would need to know, right? And that's what we need to do with the market. If we study the stocks, they will tell us a lot of different things. And one of the things that they can tell us is how many stocks are setting up, the quality of the stocks that are setting up, and the next thing, right? And the fourth thing, and the final thing, drum roll please, as I get my mouse over while I'm holding up this board. All right, the fourth thing. All right, that came off smoothly for once. Sectors and groups with lots of setups. So why is this important? How is that going to help us? How is that going to help us? The way that knowing the sectors and groups can help us is because when there's a lot of stocks from the same sector and from the same group all setting up at the same time, it tends to lead to group moves. That is how I found a number of these winning trades here, right? So here's one that I'm in right now, right? CyberArk, ticker CYBR. Why did I get into this stock? Well, I got into it for a few reasons. It's more than just, oh, it happened to be setting up, more than it happened to be a sector leader at the time. Those things helped as well. But also, a whole bunch of stocks in the cybersecurity space were all setting up at roughly the same time. When that phenomena occurs, it tends to put a lot of wind in the sails of stocks that are setting up and getting ready to break out. So it wasn't just this one here. It was also Palo Alto. It was also ALAR. It was also CrowdStrike. But the one that I'm in right now is CYBR. Same thing happened earlier in the month too, when we were trading NVIDIA. Right, NVIDIA is pulling back. It's not quite ready yet, but it could be maybe in another week or so. Same thing happened with Birkenstock, right? Multiple stocks all setting up in the same time. I believe Abercrombie and Fitch was setting up down here. I want to say Deckers was setting up at roughly the same time. Here's ANF, right? You can see what ANF did from down here and ran. Deckers, about the same, right? So when stocks in the same industry group are setting up at the same time, that's also telling us something about market breadth. And how did I find all this stuff? The way that I found all this stuff wasn't by doing anything other than running screens, right? Running screens, building watch lists, everything that's in here, everything that I share inside our research program. I run these screens, I share the lists, I give commentary on them, what I'm seeing and why, and all that good stuff. Open trades, stocks that are setting up, thoughts on them, and yeah, that's basically it. So let me know what questions you guys have. Let's move on into the Q&A section of this. And while we are in the Q&A section, let me also remind you guys to sign up for our newsletter. The newsletter goes out just about every day. I try to send out something, some kind of useful educational tidbit for everybody. I've made some pretty good relationships with some people that are on our newsletter. Um, Shout out to Diane. Shout out to Tish. Shout out to Danielle. Shout out to Fiona, who just the other day was telling me that we had some trouble with the microphone. So, Fiona, hopefully the microphone is a little bit better today. Joe had a similar comment too. So, hopefully things are a little bit better. I haven't seen anybody complaining in the comments. So, hopefully things are good. Also, right, now's the time. Get your questions in. Well, we've got a few more minutes here if you have questions. If you don't have questions, then I'm going to scoot. But make sure also that you like and subscribe to the channel, and yeah, let's get things going here. Maybe I need to get a little cricket thing going. All right. Well, yeah, if there's no questions, then want to say thank you guys so much for sticking around. This is always good and fun for me, and I hope that it is for you. So until next time, we're meeting again tomorrow. Tomorrow at what time are we doing this tomorrow? Tomorrow we are meeting at 11 a.m. for our midweek update. So make sure that you join us again for tomorrow's midweek update, and I will see you then. Take care, everybody. Much love and God bless.